Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the financial jargon and legal mumbo jumbo that companies put out there. Today we're diving into Supermicro's latest quarterly report. Prepare yourselves because it is a wild ride of explosive growth and some interesting shifts in their business. Before we get into the nitty-gritty, if you appreciate getting these straightforward insights from business documents, make sure you are subscribed. We also have a Discord community, linked down in the description below, where we break down these filings even further. So come join the discussion. Let us kick things off with a look at Supermicro's financial position. They ended the 31st of December 2025 with over $28 billion in assets. That is a massive increase from the 30th of June 2025 when their assets were just over $14 billion. This nearly doubling of their assets in just a few months tells us they are growing and expanding aggressively. Now, accounts receivable is basically the money customers owe them. It jumped from about $2.2 billion in June to a whopping $11 billion in December. This huge jump in money owed by customers directly correlates with their massive sales increase. We'll talk about later. It means they are selling a lot and a lot of it is on credit. Looking at their liabilities, things got a little interesting. Total current liabilities shot up from about $2.3 billion in June to over $15 billion by December. That increase is largely driven by accounts payable, a huge jump from about $1.2 billion in June to $13.7 billion in December, which means they owe their suppliers a lot more money. This is typical when a company experiences rapid sales growth. They need to buy more inventory and materials quickly. And let's not forget about their debt. They have about $4.65 billion in convertible notes outstanding. These are notes that can be converted into stock later on. This is a common way for fast-growing companies to raise a lot of money. Now, for the really exciting part, the numbers that show Supermicro is on fire. In just 3 months ending the 31st of December 2025, their net sales were over $12.6 billion. Compare that to the same period in 2024 when sales were just under $5.7 billion. That is a jump of over 123%. For the 6-month period, sales also soared from about $11.6 billion to $17.7 billion. This explosive growth is mainly attributed to fulfilling customer orders for data center equipment, including a large design win from one customer. They are also seeing higher average selling prices due to product mix. With sales skyrocketing, their cost of sales also jumped dramatically. It went from about $5 billion in the last 3 months of 2024 to almost $11.9 billion in the same period of 2025. This is a 137% increase. This massive increase in cost is directly tied to the increased sales volume, particularly for AI GPU servers and high-performance computing systems. They also saw significant jumps in tariff expenses and inventory write-downs due to excess or obsolete stock. Here is where we see a notable shift. Despite the huge increase in sales, their gross profit for the 3 months ending the 31st of December 2025 was about $798 million compared to about $670 million in the prior year. That looks good, but when you look at the percentage of sales that is gross margin, it fell significantly. It dropped from 11.8% in 2024 to 6.3% in 2025. This means for every dollar in sales, they are keeping a lot less of it. The company states this is due to offering competitive pricing to gain market share and a change in their product and customer mix. They are also facing higher production costs for new AI platforms and increased tariffs. Despite the drop in gross margin, they are still investing heavily in the future. Research and development expenses increased by about 14%, reaching nearly $181 million in the 3 months ending the 31st of December 2025. This increase is mainly due to expanding their workforce and investing in talent to support global growth. They clearly believe innovation is key. Interestingly, their sales and marketing expenses actually decreased by about 8% for the same 3-month period. This might seem counterintuitive with such rapid sales growth, but they reported a significant increase in marketing development funds received from partners which offset their own spending. They also saw an increase in employee-related costs here too. General and administrative expenses saw a rise of about 10.7%, largely due to increased excise and franchise taxes tied to higher sales and increased indirect facility costs. There was also a slight increase in consulting fees, but a decrease in legal fees, which is always a good sign. And after all that, what about the bottom line net income? For the 3 months ending the 31st of December 2025, net income was about $400.6 million, a good increase from $320.6 million in the previous year. However, when you look at the 6-month period, net income actually decreased from $744.9 million in 2024 to $568.8 million in 2025. This is primarily because of a significant decrease in the tax benefit they received from stock-based compensation and lower research tax credits in the 2025 period. Let us talk about liquidity. As of the 31st of December 2025, Supermicro had over $4 billion in cash and cash equivalents. That is down from over $5.1 billion at the start of the period. They used a significant amount of cash in operations during the past 6 months. They also invested over $53 million in property, plant, and equipment, and another $25 million in equity securities. The cash flow statement shows a negative number for net cash used in operating activities at nearly $941 million for the 6 months ended the 31st of December 2025. This is a big change from the previous year when they had over $169 million provided by operations. This significant cash outflow is largely due to a massive increase in inventory purchases and accounts receivable as they gear up for more sales. Something else to note is their increasing financial obligations. They have secured new lines of credit and term loans throughout the reporting period. For example, a significant revolving credit facility of up to $2 billion was entered into with JP Morgan Chase Bank. They are clearly using leverage to fuel this growth. Now, when we look at this whole picture, Supermicro is definitely in a high growth phase, particularly in the AI sector. Their sales numbers are phenomenal, showing they are capturing a huge chunk of the market. However, this rapid growth comes at a cost. Their gross margins are shrinking. They are spending more on R&D. Their operational costs are increasing, and their cash flow from operations has turned negative because they are investing heavily in inventory and receivables to support future sales. The increase in debt, while strategically understandable for growth, also adds to their financial risk. The company is essentially betting big on continued AI demand. If that demand falters or if competition heats up intensely, their current strategy of rapid sales growth financed by debt and tight margins could become a real challenge. They are also facing ongoing legal battles, which are too early to assess but could become a significant distraction or financial burden. So what is the verdict on Supermicro Computer right now? They are a growth machine, a company that has positioned itself incredibly well to capitalize on the AI revolution. But with great growth comes great risk, and their shrinking margins and increasing debt are clear indicators that this growth is not without its challenges. They are playing a high-stakes game, and this report shows they are winning the sales battle, but are facing pressure on profitability and cash flow. What is your take on Supermicro's strategy and their latest financial results? Do you think their aggressive growth will pay off, or are the shrinking margins a red flag? Let me know your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community linked in the description. Thanks for watching, and I will see you next time.